Today we will be reviewing CDFM Module 3, Competency 4, which deals with the topic of auditing. Does anyone on the phone line have any particular questions about anything we've covered up to this point? I'll give you an opportunity now to ask those questions. Okay, I don't hear any questions, so we go ahead and begin. All right, so the last couple of weeks we went over the auditing portion when it deals with accounting, finance, and we went into fiscal law. So now we're going to focus specifically on the auditing function of the Department of Defense and some of the rules, some of the standards, the policies, the key players involved in this process. First, on page 3.4.5, we talk about the regulatory guidance that we deal with when it comes to audit. It all began with the Chief Financial Officers Act of 1990. And it's hard to believe that it took until 1990 for us to institute auditing requirements. The CFO Act of 1990 required a few things. It required that each agency, each government agency must have a financial audit of the funding that they receive. They must also establish a chief financial officer. So they need to establish that position. And the third thing, as it states on the third bullet, is a deputy director for the Office of Management and Budget to focus on the responsibility of financial management. So again, there are three things that came out of the CFO Act of 1990 requiring financial audit, CFO positions created, and the Deputy Director of OMB. That position was created to provide financial management oversight of the executive branch. So it wasn't until 1990, the president at that time I looked up was President George H.W. Bush, that financial management was, up until that point, was not considered a priority, which again, if you're in financial management, it's hard to believe that it was 1990 before we realized not just receiving the funds, obligating the funds, we need to also manage the use of the funds and what exactly we're spending it on. All right, so we're going to jump over to the next page, which I'm going to go to page 3.4.7. And they talk about here, and actually let's go back to page 5, 345 at the bottom, because they introduce a key organization here, program. In the middle of that paragraph, you'll see as first of all, the DoD, Department of Defense, is the largest organization and is complex in its design. However, we are still responsible for all the same function, especially because we receive over half of the federal budget expenses, the money that we spend each year. We get the majority of mandatory bills of that discretionary budget. So the strategic long-term plan that was used by the DoD to produce auditable statements is known as the Financial Improvement and Audit Remediation. Again, I'm at the bottom of page 3.4.5. The DoD is the largest organization, I'm repeating, and it does spend the most. As we went through the budget portion, is the majority of the discretionary funding is spent on the DoD. So the DoD uses the Financial Improvement and Audit Remediation Program as a means to produce auditable financial statement. Any question? Does anyone need me to repeat that? Okay, so the last paragraph at the very bottom is telling you that the FIRE methodology defines what exactly we need to be doing. It details the activity, the task, and what the resulting product should be. So it gives you the guideline in how to conduct audit. What I need to point out is that when you talk about internal control, it's just what the word said, internal, meaning you have an internal control section to review your own operation. When you do an audit, it is an independent organization coming in to review your operation. So I wanted to make sure that's clear. On page 347, they talk about the 4 waves of this strategy for the financial improvement and audit remediation program. Wave 1, they audit once the appropriation has been received. Appropriation has been enacted, and then the appropriation is received by the organization. Wave 2, statement of budgetary resources. Remember when we talked about the accounting last week and we talk about budgetary actions, who can tell me what does that ledger number start with for budgetary resources? Just recapping. Anybody? Okay, the budgetary line starts with a 4. So we're talking about budgetary resources. So when you talk about unobligated funding, when you talk about unpaid obligation, those things are resolved during wave 2 when you're compiling the statement of budgetary resources, which also includes, as it listed on page 347, the fund balance with the Treasury. That is the official term used to define the balance of the funding at the Treasury Department. Fund balance with Treasury. Wave 3, mission critical asset existence and completeness audit. And as it states, it's where you record your assets and how much it's worth. Property accountability. All of that is wave 3. And then wave 4, which is the most important because that is the point where you determine in your financial statements audit whether you have an unmodified, you have all operations in place to make sure that you have the reasonable assurance that everything is going the way it's supposed to based on what you have to do. So those are the 4 waves on page 7. Just make sure you review those so that you understand what happens at wave 1 versus 2, 3, and 4. Any questions on anything thus far? Okay, let's move over to page 349, auditing overview. So they give you, I guess you could say in essence, a definition is an essential element as the government audit is a comprehensive assessment. That's what they're doing. They're coming in to assess your operation. It's not necessarily to be a got you type of activity, but again, if you have operations dealing with financial matters or federal funding and you don't have operations in place to audit or internal control operations, then oftentimes people are not using the funds in the way they were intended to. So that's what this auditing process does, is to provide that overview. All right, check on learning. Who provides the auditing functions for Congress?
Is it the GAO?
That is correct, the GAO, right? So you kind of have to tap back into your previous knowledge and see how it ties into. So GAO does the auditing for Congress. So then who does the audit for the Department of Defense? Anyone? Who's responsible for the accounting and finance function? That's 2 different questions, but I'm giving you a chance to come back. Who's responsible for finance and accounting in the DoD? Oh, okay, y'all want to think about it?
Is it DFAS?
It's DFAS. Don't make it hard. DFAS. You know DFAS, what do they do? Anything you need for finance or you need accounting, it's DFAS. So at the DOD level, then who does auditing? And it's not on the page, so it's not on the page in front of you. I just thought of it as I'm going through. And right now, let me see. They have a auditing agency. Let's see, Defense Auditing Agency. I gotta find out the exact name, and I think it's on the following page. Let's see. Let's go to page 3410. So it talks about, we're gonna see if we stumble on it. If not, we'll look it up. GAO standards for deals with auditing is found where? It's found in the GAO, Generally Accepted Government Auditing Standards, or commonly known as the GAO Yellow Book. All right, stoplight is red, yellow, and green. So we just learned that the yellow light is auditing. What is the red and what is the green?
Red is appropriation.
Red is appropriation law, correct?
And green is internal control.
And green is internal control. So GAO, throughout the study guide, you will learn about the GAO Red Book, the GAO Yellow Book, and the GAO Green Book. So that's why we say stoplight. So when we talked about the Red Book, we talked about appropriation. When we talked about yellow, as you see in front of you, it deals with auditing, and GAO guidance on internal control is found in the GAO Green Book. And I'll show you that where it says it with the Green Book. So that's where you go. Let's see the second paragraph. GAO standards apply to audits of government organizations. So any organization that receives government funding. So it could be by a contractor. It could be a nonprofit organization. So any organization that receives taxpayers' dollars, government funding, must be audited. That's what that's saying. It must be followed by GAO standards. Inspector General, you hear of DODIG? Have anyone heard of that organization? Y'all quiet on me. Come on. I can't make it any more exciting than it is, so I need feedback. DODIG and DOD Inspector General deals with the auditing of the organization. All right, so let's now go into the meat and potatoes of the auditing function, which is the GAO standards. So there are 4 GAO standards on page 3411, and we're going to talk about each one. Auditor Independence, Auditor Professional Judgment, Auditor Competence, Quality Control, and Assurance. And you need to know each one and what is covered under the one. Auditor independence is exactly what it says. If someone's coming in to audit you, you don't want them to be a part of your organization. They don't need to have any biases. They don't need to have any tie-in. They don't need to be someone who is evaluated by that senior person, and then they're going to tailor the report because they don't want to be looked unfavorably by that leader. Independence of mind. So that state of mind of that auditor should be clear when they come in to do the audit. Independence in appearance. So whether it's a directly stated that, hey, make sure that this report comes out favorable, or appearance. Well, General so-and-so is going to be looking at your report. Independence in appearance. So auditor independence is pretty straightforward, so I'm not going to add anything else to it. Any question on independence? So they give some examples on page 12, threats to auditor independence. Some things that can get in the way of that auditor be feeling clear mind no appearance of reprisal because of their report. So some threats, self-threat, interest threat. Self-review, so self-interest meaning they have a tie in on how the results should come out and it looks favorable on them. They should be an independent party. Self-review threat, bias. If they're part of the organization, not too many people are going to want to say, well, yeah, my organization sucks. It's not doing good. We're not doing the right things. So you don't want that. Threats, familiarity threat, undue influence, management participation, and structural threat. So please review the threats to auditor independence. The second is on page 3413, which is auditor professional judgment. If a person comes in to do the audit, we expect them to be professional in the way they plan, the way they coordinate, the way they deal with their findings, the material, their findings, exercise reasonable care, and you can go through the list under auditor professional judgment. On page 3414, the third one is auditor competence. So we expect the auditors to be trained. Trained in that they must complete continuing professional education, CPEs, every 2 years with a minimum of 20. So I'm reading out of the second paragraph on the bottom of page 14. So this is the same requirement that you will have once you earn the CDFM certification, is you will have to complete continuing education every 2 years, 80 hours, and within that one of those years, at least 20 hours must be done in 1 year. So you couldn't, like the DoD certification, you can actually wait till the second year and do all your training. You can't do that with the CDFM. A minimum of 20 years in one of those years, and the rest of the hours, the other 60 hours, got to be in the second year. The third paragraph is important because a lot of times when people come into audit, we expect that person that's inspecting us to know everything about what we do. And they were like, well, they don't know what they're doing. What it states in the reg is audit organization are responsible for ensuring that the staff members collectively, all of them together, have the necessary skills, knowledge, skills, and ability to do the audit. Any question on that? So the competence is them being trained. The competence is them collectively being qualified to come in and do audit in the organization. Y'all don't have any questions? You got to give me some time to drink some water. All right, still quiet on me. All right, page 15 is the fourth. GAO standard, which is quality control and assurance. So it says this standard has two components. The first part, audit organization must establish a system to provide. So again, when you do your audit or your internal control, annually you have to do that audit report where it talks about unmodified, or you don't have any issues in your organization. You're doing everything. You have reasonable assurance that all processes are done correctly. Second, audit organizations performing audits and attestation engagements in accordance with GAGAS must have external peer review. So that's important. How often does an audit organization have to be reviewed by an external organization? Anyone? How often must an audit organization be evaluated? And it's in the paragraph. 5, 4, 3, 2, 1. 3 years. It's in the paragraph on the bottom of page 15, where it talks about how they must be evaluated by an external peer organization, and it must be done once every 3 years. That's part of your quality control and assurance. Does everyone see it in the paragraph before we move on? Or you can look at the slide at the top. Is that a yes? I think so.
Yes.
Okay, so I just used the word at the beginning, that first paragraph the last paragraph, the first sentence. Second, audit organization performing audits, which we got what the audits are, and attestation engagement. Does anyone know what that is? And again, while you're studying, when you see a word you don't know what it is, you need to investigate because you need to understand why it's important in that process. So what is attestation engagement? So attestation engagement is the process that is used when, let's say, in your organization and you have a problem area that you want to know how are our processes? Is it good? Is it bad? You can request an auditor to come in to evaluate that process. So it's an arrangement that you make. You invite the auditor in and you say, I want you to review our in and out processing operation, for example. So whenever you coordinate with the auditor to come in for a specific purpose, that is called an attestation engagement. Is that clear to everyone? Okay, so on page 16, GAO standards in conducting audits, and now you know what attestation engagements are. It talks about financial audits, a performance audit, and attestation engagement. And so we're going to look at each one of those. So for the financial audit, it talks about the standards address planning, consideration of internal control, and the need for evidence to support the auditor's opinion. Financial audit typically would deal with your financial report, the report you get out of GFIPs. Because like they say, garbage in, garbage out. Is the data that you're getting out of GFIPs correct, or whatever system you're using? So your financial report. Performance audit can be, do you have the right separation of duties? Do you have inputter, certifier? Those are types of performance procedures in which you can determine, do we have reasonable assurance? And again, as I mentioned, attestation engagement is an audit, but you're the one that coordinate for that auditor, independent auditor, to come in. On page 17, talks about the Yellow Book reporting standards. Reporting standards provide guidance, and you find that in the GAO Yellow Book. For financial audit, the standards address, it tells you compliance. According to the regulation, the guidance, consistent application of the accounting principles, you're making sure that they're following all the financial processes, policies, guidance, regulation, according to the Yellow Book. So all this information is straightforward for you. So remember the question I asked earlier, who at the DOD is responsible for the auditing function? On page 18, it tells you the Inspector General, the DOD IG, is responsible for the auditing functions at the DOD level. Does everyone see that? So it reads, the Inspector General Act of 1978 requires federal inspectors general comply with the Comptroller General. So remember, the Comptroller General is in charge of GAO standards for audits. Under that requirement, the DOD Inspector General serves as an independent and objective official in the Department of Defense. So they provide leadership, supervise, monitors, recommend policies designed to promote economy, recommends policies for the prevention and detection of fraud and abuse in DoD program. So DoD IG responsible for the auditing function at the Department of Defense. On some other audit organization within the DoD is on page 19. So in the Department of Defense, they have several different types of audit organization other than the Inspector General. You have the Army Audit Agency, Naval Audit Service, and the Air Force Audit Agency. Which one is missing? Even though they only listed 4, who can tell me what's missing that you know is an auditing organization? Okay, let's go to the bottom of page 3421, and I will tell you. So you could say, in essence, this is the 5th organization, even though they didn't list it together. When they talk about the types of audit, all federal audits are initiated and conducted by basic legislative, okay? But that last paragraph, contract, Defense Contract Auditing Agency is another audit organization within the Department of Defense. Why they didn't put it together with the other one, I can't tell you, but I'm pointing it out to let you know there's really 5 of them. DCAA, dealing with all the DoD contracts. So DCAA performs all necessary contract audits for the DoD and provides accounting and financial advisory services. So anything dealing with DoD contracts, the DCAA is part of it. Does everyone see that? So you have the 4 that's on page 19, including the one on page 21, which makes 5, Defense Auditing Agency.
Yes,
Well,
ma'am.
okay, so what are the 3 types of audit? On page 21, since we're already there, financial, performance, attestation engagement. On page 22, they give you the description. Let's see how they read attestation. Attestation engagement, auditors issue an opinion as a result of an examination, a conclusion on the result of a review, and a report as a result of an agreed upon procedures relating to a subject matter. So you see how that's worded, but all it's saying for attestation engagement is the organization determines what needs to be audited and they invite that third party in. Whereas the other audit is either it's DFAS coming in to do a financial audit if you deal with funding, or GAOs coming in to do an audit. You don't determine what they come in, when they come in, and you don't determine what they look at because they have a scope of what they're coming in to look for. Any question on the 3 types of audit?
No.
None? Okay. So on page 23, all they're saying there at the top is whether a financial, a performance, or attestation engagement, the auditor has the responsibility to consider compliance. It's bottom line, are you in compliance with the rules, policies of performance for that particular action? So that's what they're looking at. So some non-audit services that auditors can perform at the bottom of page 23. Some auditors may develop methods and approach to be applied in evaluating new or proposed program. They can provide input, forecast potential program outcome based on operation. They can help you to forecast, or they can help perform investigative work. So not only they've done their evaluation, now they can help you to investigate why particular action occurred if you can't figure that out in the internal control. Page 24 is the audit plan. Overall audit plan is what determines what's going to be reviewed. So let's go to page 25, where it gives you the 3 phases of an audit. The 3 phases are audit planning, review, and reporting. So the planning piece of it is where you define the scope, what you're going to be looking at, when, how long it's going to take, what type of methodology is going to be used to provide to that client. Auditing phase develops the scope, design methodology, consider materiality and effectiveness of your internal controls processes, and evaluate whether the audited entity has taken appropriate action, corrective action, because not only identify that there's an issue, is then they must follow up to ensure that the issue was corrected. So that's all part of the planning. What's the follow-up plan? Page 26 goes into the review portion. The review is the actual going out and gathering evidence, gathering data, and making sure that it's adequate, because you can't come in and look at everything. So that's why the planning phase is important, for them to determine what exactly is going to be reviewed. So the audit review begins by gathering audit evidence. Let's see what else. The last paragraph on page 26, whenever they have quotes, I always try to point that out. The standards require that auditors document the evidence they gather in the form of an audit documentation. They used to call working papers. So make sure you annotate that in your notes. The documentation must be understandable to an experienced auditor with no prior involvement in that. Means anybody else can pick up that document and understand what the findings were. Page 27 goes into the audit report phase. And so they kind of break it down here. For financial audits, the standards specifically require that whether the statements were presented in accordance with the generally accepted auditing principles and responses reasonably adequate, inconsistent with last year. So those can be the different types of findings in that financial. But what is important to understand is the types of opinion. Your opinion can either be unmodified, modified, disclaimer, or adverse. Whenever you have a list, you need to know what the list is, what they mean. So if they put a different term into it, you'll know which one is not a type of opinion. So unmodified is the best. Modified has an exception. Disclaimer, unable to render an opinion. Based on their findings, they could not render an opinion, or adverse. Material misstatement of fact and failure to follow the generally accepted principles. So those are your 4 opinions. 28 goes into the concept of an audit finding. They look at the condition or the circumstances, the criteria, effect, what, so what, did we lose money? What? Cause, why did it happen? So these are just different elements that can be used or annotated in an audit finding. At the top left, when it talks about performance audits, the very top, for performance audit reports prepared under the Yellow Book, the auditor needs to refer to the standards discussed in the previous. In addition to the reporting standard, guidance from the GAO includes quality elements, timeliness, complete, accuracy. So as I mentioned, those are some of the performance things as we do. What's our timeliness rate? How fast? What's our turnaround? Of once we receive documentation, how quickly do we get it done, certified, and submitted to DFAC? So all those are additional things looked at under performance. Audit reports potential benefits. So the potential benefits that we have at the end of an audit, look for efficiency, effectiveness. It can either be monetary, where you can actually tie a dollar amount, or non-monetary. So what you're going to need to know is, what's a non-monetary? Who could tell me what's an example of a non-monetary benefit? It's still a benefit to the government, but you can't really tie a dollar amount to it. What's an example of that? Other than one that's given, let me see. Any takers? What's a non-monetary benefit within your organization? Once you do an evaluation and you determine, okay, if we do this action, we can save money. Okay, that's a dollar amount. But what's a non-monetary benefit? Timeliness. Is that a monetary benefit? I think that's non-monetary. Enhancement of morale in your organization. That's non-monetary, but it's important enough for your personnel. So just kind of think of some examples when you have, because monetary benefit is easier because you can put a dollar amount to it, but non-monetary, even though they list a few things, make sure that you know what things can be considered non-monetary. And as promised, the very last paragraph on page 30 is where they mention internal control, and the GAO regulation is the GAO Green Book. So when evaluating internal control, auditors apply the GAO standards for internal control in the federal government, also called the Green Book. And to tell you the truth, this is the only spot where I can remember seeing the GAO Green Book. So most people kind of look past it. So now you know the GAO Red Book, Yellow Book, and Green Book deals with internal control. So audit review, you can also do an audit on your internal control procedures to ensure, again, that you're looking at the right things, you're asking the right questions, you're following up. Once you identify a discrepancy or a deficiency, do you have a follow-up period? Can you show that the action was corrected later on? So that, in nuts and bolts, is the auditing function for the CDFM. What are your questions on auditing as I move back here? Or actually on what we cover with accounting, finance, fiscal law, and now auditing. So you can ask me any question. Yes, ma'am. Did I hear a question? And I think I will wait for next week and just do the review then, because I don't like to start new functions. All right, if no question, we're going to end with that for today. And then next week we'll do the review. Okay, thank you all for stopping by. This is Helen Thomas and the CDFM study group. I'll see you guys next week as we go over the review of CDFM Module 3. Have a great day.
Thank you.